Hey traders, Raghee here. I have a bunch of things I want to cover in our recap video. It's a little bit eclectic, but it just kind of goes to show that once you start connecting the dots in the market, they will lead you to so many different related markets and opportunities that that's just where it gets exciting, doesn't it? So let's start with one of the questions that I've been getting probably most often, which is, Rag, where is the money flowing out of as it leaves tech? And look, whether or not tech is falling out of favor or anything like that, I'm not interested in shorting tech. I just don't want to be as aggressively long as I have been. So we had a number of great long positions in the NASDAQ since about May, and now that the uptrend has been broken, whether you look at QQQs, XLK, and Q, it doesn't matter which flavor of the NASDAQ you're looking at, we're seeing that rollover now complete. Now the rollover doesn't mean we're going from an uptrend to a downtrend. It means that we're going from an uptrend to chop, and that is the key part here. The mistake a lot of traders make is they think there's just two kinds of market trends, up or down, and that could not be further from the truth. I'm going to carry with me a bullish bias, which means I'm going to be looking for an oversold market at some point, just not yet, right? Not going into the holidays. So the question then becomes, well, Rog, where is the money going if it's leaving the NAS, leaving tech? And what's interesting about the psychology of this kind of exhaustive top picking. In other words, people think, all right, the market's gone too high, it's going to head down lower. Well, they're guessing at the top, right? Well, what happens is they equally start guessing at the bottom. So you start to find people rolling out of very strong markets and looking for opportunities in markets that they believe are underpriced or could be finding a bottom. And it's not hard to see that money's flowing into XLE. You can see corrections on the crude oil market, which I'm now flat in, by the way. Crude didn't really give us much of a chance to see the follow through. And I'm out of crude now, not corn. I'm out of crude. There we go. I'm out of crude. And, while some of the energies have been kinder to us, like natty gas is just delivering. And I got a lot of questions on natty gas, so let me cover this for a minute. Now, here's some basics about natty gas. We're trading the August contract. Natty gas cost about $2,100 per contract. It's about 2,090. Your broker will have, their slight difference. They just have to follow the exchange minimum, but it's going to run you about $2,100 to control a contract of natty gas. And what we've had is a move from 3,155 down to the profit target most recently of 3.005. Now, on one contract short, that is $1,100 per contract. So we're talking about a 50% ROI on this trade here, and then now we're going to be at a break even. So while on the smaller position size that we now have, because I've scaled out now twice, we went from 3.115 to 3.055, which was actually a short down to that level was actually a, what was that on 3055? That would have been just $600, right? So 3.115 to 3.055, that's 600. We scale out about a quarter to a third of our position, maybe even half. Then you go down to the next level and you take a little something else off the table. So as the trade goes in our favor, we're actually reducing our position size by paying ourselves. And then on the break even or trailing stop, we've minimized how much we're giving back because we just simply have a smaller position size. But we still have enough that if we continue to move lower, which I suspect we could, we can still profit from the continued downside. So yes, crude oil kind of stunk. So let's talk about crude here, right? I'm talking about a profit. Let's talk about a loss here and show some dollar denominated there as well. So on this one, and by the way, we don't shove losses under the rug here. We've had a lot of great winners. We've had a handful of losses. This is probably the first actual flat-out loss that we've had in about 2 weeks. So every now and then we have to take our medicine. So let's define what the medicine tasted like here. It wasn't fun, but it wasn't debilitating. So we had a 45.75 short that went and stopped us out at 47.05. So I'm done with crude here. Green grab candle, a break of the Darvis high, a break of the 34 EMA on the high. We can re-enter at some point, but it will likely be an intraday wave reversal. Am I trying to get my money back? Is this a revenge trade? No way, no how. However, I do think we're going to have a pretty interesting opportunity to possibly get a 30 or 60-minute wave reversal and take some of the sting out of today's loss. What was today's loss? So to control a contract of crude is going to run you $2,750, a minimum, right? That's the margin requirement. For many of you, I said, look, if that's too pricey, look at QM, which is half the size, half the point value, half the margin requirement, or play USO, so you can play whatever increment you're comfortable playing. This was, per contract, gang, this was a $1,300 loss per contract. So again, you got to think about these entries before you take them. With $1,300 present too much of a risk. Now, the Natty Gas trade was much lower risk because we took a much more conservative entry, so the distance to the stop was much smaller. So for that reason alone, a lot of you said no thanks to crude, because we can, before, ahead of time, you know exactly what the loss is going to sting like, and you know exactly what the profit is going to taste like, right? You know both sides of it, and then you can decide whether that trade is affordable for you. So some of you said yes to Natty Gas and no to crude. Some of you said no to crude and yes to things like XOP, OIH, and different XLE. Some of you said, you know, Rog, I don't want to play crude oil, but I like these ETFs that you've been showing me. These are still holding validity, and a number of these have triggered today. I'll talk more about that in the chat room on Wednesday. A lot of these ETFs related to crude have given us our entry. So I'll talk about that. So for some of you who might have been taking your medicine on crude or didn't take crude at all, you were doing what? You were taking the ETFs, OIH, XLE, also XOP in lieu of crude oil, which we have been talking about a lot. That if we were going to rank the desirability of taking crude shorts to some of these ETFs, the ETFs have much better looking trends. Okay, so that's the way the crude oil cookie crumbled. Another one of the recaps here. Okay, let's talk. And you know, I like talking dollars every now and then, not often, because sometimes traders really want to know, okay, Rog, what was the upside? What was the downside? Can I know this ahead of time? Absolutely. Let's talk about NAS, because this was an interesting story and is another reason why if you're going to play some of these, you've got to make sure you know where your profit targets and your stop losses are. Now this one is a happier ending, but you had to be vigilant about it. This one was a 56.20 entry. We took this Friday and took it into the weekend. So what we were looking for was a 56.20 entry. So you're looking 56.20 long with an exit price of 56.90. Now that doesn't mean you get flat. That just means that you're looking to take profit off the table, scale back your position size, and either go to a break even or trail a stop. Okay, so 56.20, and some of you got better fills than I did on Friday because the market went all the way down to 56.01. So a number of you told me you got in at 56.05, 56.10, but my entry was 56, I believe it was 56.23. Okay, so that was the entry long. 56.90 was the profit target. All right, so getting long on the NAS from that level meant, and let me calculate this for you. So if you go ahead and get long at 56.20, which is, you know, 56.23, I'm not going to assume you guys got better than that. If you did, it's just a bigger profit target, which is super. Okay, and you got out at 56.90. That was a $1,340 per contract win. Okay, that's a nice win for us, gang, and that's exactly where the market went. And notice where it topped out at 56.90 3/4. You have to have your profit target levels parked, gang. You don't want to just go, well, it'll trade through and I'll get to it when I get to it. No, you got to be proactive about those profit targets. And once you get an alert that you've taken something off the table at 56.90, you move to a break even. And this was the important part, gang. You move to the break even. So this was actually, we talked about this one basically being a break even at 56.20, meaning you're not going to humor this long a whole lot more than the entry level. So even if you, let's say you gave this a little bit more latitude, which is fine. Let's say you gave this thing latitude from 56.23 down to 55.95, which is a whole lot more room than I would have given it. But let's say you did. Let's say you gave it that much extra. You would have given back of the profit you just made $560. Now, if you made about $1,400, is that tolerable? It may or may not. There's no right or wrong here. It's really a matter of how much unrealized profit or how much of the realized profit are you willing to give back. It's still a net win. There's still a net win here, right? But it made a whole lot more sense to go with, say, 56.15 on that than it did to go with 55.95. And a 56.15 trailing, you get just below your entry at 56.20, give it a little bit of wiggle, and you're risking $160 per remaining contract. That's much more palatable for me, and that's what we talked about live this morning in the chat room, okay? And I know this recap video has gone on a little bit longer, but I really want to dive into some detail here with you guys and let you know what kind of trades we're putting on and what kind of dollar risk. And of course, you guys can play with the size. You don't have to take full-size contracts. When there's a mini, you can take that. If you want to go with the ETF or with options, you can do that as well. Very important there. Okay, so that's about it for our recap video. I know we're going into the holiday tomorrow with 4th of July. For those of you in the U.S., because we have members all over the planet, I remember at one time I even had a member at the South Pole. So I thought, wow, I've had members in every continent but one. That's pretty cool. So for those of you in the U.S., happy 4th. For everybody else, heads up for the illiquidity in terms of the U.S. participation being lower with the bank holiday. Have a wonderful day. My friends in Canada, happy Canada Day. That was yesterday. A lot of my friends in Toronto were telling me what a great time they had over the weekend. So lots of great celebrations going on. Everyone have a great one. I'll see you in the next update.